Welcome back, traders. This is Pips Empire, and today we are going to discuss a very juicy topic. The topic is trading plan. We're going to start by pointing out some things you should include in your trading plan to be profitable as a forex trader. But before then, before you talk about trading plan, you have to know what type of trader you are. Are you a scalper, a day trader, a swing trader, a position trader, or whichever one it is? So majorly we normally have scalpers and swing traders. We have few position traders though. I'm talking about the retail traders, and then day traders too. So sometimes you can categorize both day traders and scalpers, and then position traders and swingers, because day traders and the scalpers are short-term traders. Like their trades last between a day to two, or just within one day, or within hours or minutes. And then position traders and swing traders hold their trades over a long period of time. It could be 2-3 days, 4 days, 1 week, 2 weeks, months, and all of that. So you have to know if you're a swing trader or a scalper before you talk about listing down or having a trading plan, because trading plan of a swing trader and the trading plan of a scalper differs, because a trade trader can have up to 10 trades in a day or in a week, while a swing trader or a position trader can have just one setup in a week. So I'll start by putting down some points we need to put in place while formulating our trading plan. The first point is trading strategy. Okay, this is the number one, trading strategy. Okay, I'll be using swing trading as an instance because I'm a swing trader. If my strategy is, let's say, supply and demand, or maybe support and resistance, this will strictly affect my trading plan, because my plan for the week could be to have a single setup that will run for like 2 or 3 days as a swing trader, or two setups that will last for 4 or 5 days, depending on when I get the setup and all of that. So as a swing trader, you have to have a working strategy. This is the first point. You must have backtested a particular strategy, be it supply and demand, SMCs, support and resistance, indicators, whatever you do, whatever you use, just make sure it's a working strategy. That's your number one. So with this, you'll be able to be profitable with your trading plan, because if you have a trading plan that doesn't work, then you will keep losing your accounts and having issues and difficulties while trading. So you have to have a working strategy. Then the second point is trading instrument. Second point is trading instrument. Let me align this together. All right. So you have to have or know the particular instrument you trade and why you trade it. Some people trade only indices. Some people trade some currency pairs, the majors like the AUD USD, Euro USD, and the GP USD. Some people trade just gold, and some people trade stocks. Your trading instrument will also have an effect on your trading plan, because your trading plan on Nasdaq will be different with that of Euro USD, because one is more volatile than the other, and their movement, their fundamentals, and every other thing is different from each other. So your trading instrument will also have to do with your trading plan. So you have to make sure you know a particular trading instrument you'll be profitable on. If it's currency pair like Euro USD only, fine. If you can trade up to 3, fine. If you can trade both indices, metals, everything, fine. The main thing is that you have a profitable trading instrument that works. Some people say that they hate GBP JPY, some say that they hate gold, some say that they hate Nasdaq. Why some? have made tons of money from those pairs or instruments rather. So it doesn't matter what others are saying, it's about you. So that's why you have to backtest. You have to know the particular instrument that works best for you. So the next point will be backtesting, just like I mentioned already. Point number 3, backtesting. Okay, this is the third point, backtest. Backtest have to do with your trading strategy though. So when you have a trading strategy, you have to backtest it over time to make sure it's working. So this is more like a bonus to what I already mentioned in these first 2 points. Then the next one is risk management. That's the point number 4. Number 4. All right. The next point, which is the fourth point here, is risk management. No matter how good your trading plan is, if you have the best trading strategy, if you trade the best instrument, and you don't manage risk, all you are doing is in vain, because risk management is what will keep you over time in the forex market or when it comes to trading. Because most people have a good strategy, they trade a good instrument, they have a trading plan they follow and all of that, but then they don't manage risk, and at the end of the day they lose their account, they lose a substantial amount of money, and they are frustrated. So in all you do in forex, make sure you are managing risk. This risk management, I already did a video on it. Is our lesson 11 in forex 201. So I will add the link in description, so you have to go and watch the video and see what I explained there about risk management. So make sure your risk management game is intact. If not, you are going to keep losing in this market. And then the next point I'll have to mention is trading time, or some people say trading session, whichever one you call it, it all works. So the fifth point is trading time. Okay, the time you trade matters. This is mostly for day traders and the scalpers. Some people like trading during London session, US session, Asian range or Asian session and all of that. So it all boils down to individuals. I can't tell you that this time is the best. One, time depends on what you're trading and the kind of trader you are. If you are a swing trader or a day trader. Okay, like I said, I'm a swing trader and I trade Nasdaq mostly. Nasdaq is my major pair. That's what I majorly trade. And Nasdaq market opens by 2:30 my time. So that's the best time for me to trade. Anything below 2:30 could be so risky because the market volume could be so low at that time. So the market could be clumsy, spiky and all of that. So my best trading time for Nasdaq is 2:30 p.m. and while I trade currency pairs like Euro USD and the rest of it, I trade it during US session. That's by 1 p.m. my time. So it works better for me at that time. Some people like trading it in Asian session, London session and all of that. The main thing is that it makes them money, it works for them. That's the most important thing. Swing traders also, maybe when you enter a trade matters. You don't want to enter a trade when it will be so messy and rangy, maybe during Asian session and all of that. So you like to enter a trade maybe during US session or London session when the market is more volatile and all of that. So that's the fifth point. And then the next point is journaling. That's the sixth point. All right, in your trading plan you have to journal your trade. It should be one of the most important thing you have to add, because when you don't journal your trade, you can't keep track record of what you are doing. Sometimes in the chat you can see some setups you have seen. Maybe you saw this particular setup last year during so and so period of time in a Euro USD, and now you are seeing it this period. So if you have a track record of what happened that previous time, you'll be able to utilize it at this current moment, because the same thing is about to happen. Remember that price action is more like a repetition of what has been happening over the long run or over the years. If you saw a double bottom at this particular time frame in 2021 on Euro USD September 28th, and you're seeing the same pattern again today, which is November 2022, and for the fact you had a record of your trade in 2021, you'll be able to ascertain that this is what will likely happen this period, because this already happened in 2021. So journaling your trade is very, very important. It mustn't be as long as 1 year. It could be last month, last week, few days ago, and all of that. So you make sure you journal your trades. Very, 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 very important. It will be very, very simple for you to know if you are going up or going down or stagnant. So it's very, very important. And then the last of it is trading goals. That's the 7th point. So the last one here is trading goals. That will be the last point I will mention today. Okay, trading goals is more like what I want to achieve, and it should be in your trading plan, Okay, my goals could be I will make 25% of my capital in 1 month, in 2 weeks, in 2 days, in 1 day. It could be I would not trade more than 3 markets per day. It could be if I lose 4 trades in a row, I will take a break. It could be I will take 70% of my profits and invest in other things that are not forex related. It could be I must stick to a trade of 1:3 and above. It could be I would invest 2 to 4 hours per week in learning new things about forex trading, reading books, watching videos, and all of that. It could be I would take out 1 week not to trade because I broke my trading plan. So all these things could be your goals. Maybe you want to make so and so amount of money within this period and all of that. So all these things are the things you should have in your trading plan. So make sure your trading plan is working, is achievable, is something that can be achieved. Don't make it so cumbersome that it will be so hard for you to achieve. So with all of this, if you put in the work, your trading experience will change. It will never remain the same. So it may not be easy, but you have to try your best. You just have to implement the work. You have to do the work for you to have a good result. If you have any question, drop it in the comment section, and make sure you like this video if it's actually helpful to you, and subscribe to our channel if this is your first time. And for our subscribers already, thank you for your support. I really appreciate. See you next time.